I know how overwhelming being in debt is, and especially when it just seems to mount up and there's no way out. Kind of like you're in a magic show, you're getting dunked underwater in a straitjacket, but you're not David Blaine or you're not a whoever magician. So in this video, I want to share with you what I would do if I was $100,000 in debt right now. And let's just say half of it is student loans and half of it is credit card. So the first thing I would do is write down everything. And I'm not just talking about numbers, not just income and expenses and assets and investments and all that. I'm talking about relationships, strengths, weaknesses, qualifications, education, everything that could help me get out of this horrible debt. Then I'd look into the numbers and ask myself a few questions like, where are my biggest chunks of money going? Are there things that are flexible and are there things that are not? For example, if you have a car lease and there's only 3 months left on that car lease, okay, we know that for 3 months, it's not really gonna be flexible, but after that, that's really gonna be open. If you own a house, that's a big obligation. But if there are things that are taking $100 a month, $200 a month out, like memberships to gyms, certain things like that, that you could easily cut out of, I'd be like, okay, now I know these are things I can cut here. These are things that I can't. These are things that I can cut out or change in 6 months or a year. But I want to know where all those things fit. But I also want to know what brings me the most joy. If I have a list of 30 expenses, I want to know, okay, health insurance, that brings me joy because that's peace of mind knowing that I'm covered from a disaster. I need that. However, I go down the list, $200 a month gym membership. Well, you know what? It brings me some joy, but honestly, for that price, I can cut that off. So I then analyze things and go over what is the best things to cut out now. And I'll also see how realistic it is that I pay off this debt in 2 years or 3 years. I mean, look, if you are 100,000 in debt and make 30,000 a year, good luck. That is going to be a long-term goal. However, if you're making 400K a year and you're 100,000 in debt, what are you doing? You should be out of debt in a year, maybe even 8 or 9 months. I mean, what are you spending all that money on if you have 100K in debt? Now, assuming I had $1,000 or $2,000 worth of money in a savings account just for emergencies, the rest of it would be going towards that credit card. So if the debt was divided 50,000 credit card, 50,000 student loan, I would focus on the credit cards first because usually the interest is way higher. If you're getting charged a lot more money in one field and one debt than another, we want to get that out of the way first because that's robbing you of more and more money. So student loans, they can wait. Let's focus on that $50,000 worth of credit card. Find the one with the lowest balance because we want to just knock that off the list. If there's one for $500, boom, what can we do just to nail that one, get it out of the way, then we'll move on to the next one, the next one, the next one. I would look at my savings account and anything above $1,000 or $1,500 should be taken out and attacked on that credit card because what's the point of having money in the bank for $1,500 extra dollars or whatever, let's say it's $5,000 in the bank account just sitting there making no money when I'm getting charged 18% of my credit card for $5,000 that I owed before. We want to dump that, put out that fire. I would also look at investments I have. Are there things I could sell? Do I have a motorcycle laying around? Do I have jewelry? Do I have equity in a house? Did I invest with someone else and I could sell off my shares? Because I'd want to do that to pay off this debt because more than likely that investment is not going up more than that 16 to 20% credit card. Now going forward, I would not save any more money and I would not invest anymore. I would focus on that credit card with the lowest balance, whichever one it is at the time. I would look at my expenses. Okay, where's all my money going? It's probably housing, transportation, and food. Those are 3 of the biggest bills, especially here in Los Angeles. What can I do to cut this down? Now, if I have to live with 3 other roommates, then so be it. Humble yourself. If I have to sell that BMW and have a public transportation or have a Vespa, then so be it. Guess what? I have a Hyundai car. I do not drive a BMW. I have a roommate here in LA. I do not live alone. I have a Vespa, which gets me around everywhere and I paid cash for it. Bottom line is you have to humble yourself if you want to get out of debt. If you want to stay at the same lifestyle, then you need to make way more. But right now, debt is basically saying, I am living beyond my means. Here's my means, here's my lifestyle. We gotta do this for a while so that ultimately it's on par. So I'd get my housing as low as possible, I'd get my transportation low as possible, and I'd see where there's wiggle room in my food. But I pretty much eat the same because I am a big advocate of eating healthy and eating organic. That does not mean I go to Whole Foods and drop $150 a week. I go to Trader Joe's, I find the best values, I buy in bulk, I buy frozen, I find the ways to eat organic, and I prep the food myself. I don't buy this ready-made stuff which has a tax added to it and has a markup because someone does the work for you. I'd want to make sure that rice and beans, frozen spinach, my smoothies, bananas, all that stuff is organic and it's going to keep me healthy, because I do not want to get sick and have to go to the doctor or have to take off of work and make me look bad in front of my coworkers, and then they get promotions and they get opportunities that I don't because I'm not available. Lastly, I would go down the line of smaller expenses and I'd cut out the stuff that is not absolutely necessary. Again, a $10 a month Netflix membership could be worth it because I'd rather have $10 a month of escapism, that's my reward for hustling, that's my little bit of release and relief, rather than, okay, $50 a month for a cable bill or a Disney vacation, because that vacation is not happening until I'm well out of debt. That's the defensive side of the coin. Let's flip over to the offensive side, which is increasing income. If you focus on just defense, you know it's going to take longer. But if you focus on cutting expenses while increasing income, now you can get this done a lot quicker. And guess what? When you're out of debt, but still making more income, great. Now you have more income coming for the rest of your life.